Everyone, welcome to episode 3 of Inside the
Yeah.
Offer. Really excited to be here with you today. My name is Ben Handelsman, a 20-year veteran of the realtor occupation. Here with my friend Jeremy Stybel
Yeah.
with
Thank
First
you.
Securities Mortgage.
Yes.
Glad you could be here with us
30
today.
years.
30 years.
Yes. 30 years of the mortgage industry.
Okay.
A lot has changed.
Yeah, that's true. A lot has changed just in the last week, so
Yes.
we're going to talk about that
I know.
today.
But I'm excited to be here.
Excited to be here. Thank you for everyone who's listening in.
Hopefully thousands and millions of you.
Yeah,
right?
exactly. So in this episode of Inside the Offer, we are going to talk about inside the perfect offer.
Is there such thing as a perfect offer, though?
I think so.
Okay.
Yeah. Yes.
All right.
There is such thing as a perfect offer, and we're going to talk about that today. But like we start off all episodes, we want to talk about what's happened in the last week since we last were together.
Yeah.
I think the biggest news, which came out today, is we have a new Fed chair.
We do.
Starts today, actually.
Yeah, he was confirmed on Wednesday by the Senate. So, yeah, good luck to him.
Right. Exactly. So, obviously, there's a lot of politics involved
Yeah.
with this. We're not going to get into that, but as a mortgage expert, maybe you could talk a little bit about what people can expect. How does this change things, or maybe it doesn't change anything? What are your thoughts?
You know, it goes back to, obviously, President Trump wants rates to come down. However, this war, whether you're for it or against, doesn't really matter at this point. This war has caused inflation to spike. And unfortunately, it is putting pressure on the Fed, and we'll see what happens now that Kevin Warsh is the new Fed chair. What will happen? And will the president have influence over the Fed to lower rates, even though what we're reading, well, one, we're not supposed to, but two, what we're reading is based on some of the data that's coming out, they may be talking about tightening instead of easing the policy, which means they may eventually have to raise the rate again based upon inflation and some of the other key performing indicators that are happening in our, basically in our economy.
Right. So the last I saw was maybe 3.8% was inflation, and normal range is about 2%.
Yep.
And typically when inflation is high, they will
Increase
rates
to offset.
Right.
Yes.
And when inflation is low, then they will drop the rates.
Yes, correct.
For people that don't know.
So towards the end of last year, they were thinking that there was going to be multiple cuts. Then the beginning of this year, like, oh, okay, we're not sure if there's going to be multiple cuts. Maybe there's going to be one cut this year. And then once the war started, all of a sudden it's like, oh, maybe there's not going to be any cuts. Mm-hmm. And then as the war keeps going, and especially when the president just left China, and there was no talk about an end to the war, now they're talking about maybe there's going to be an increase in interest rates. So there's just a lot of up in the air, not knowing what to do. But we're at 8-month highs right now for rates. So is it the best time for rates to go up, especially when we're going into purchase season? Not necessarily. So now this is more important for anybody that's listening to make sure that they're working with an educated mortgage professional who understands the market. Now, we can't predict the market. No way to predict it.
Right.
People ask me all the time, where do you see rates going? What do you think? Should I lock in or should I not lock in? And I say, just like everybody else, if we had the crystal ball and we knew what was going on, I'd be talking to you from my island, sipping my Mai Tai, right? It wouldn't be, it was perfect, but it's not going to happen. We don't know from day to day. It is always about the information that is being brought to light and then the spin that the Fed is talking about that information. Yeah. And so, like I said, you have to have the right person that is kind of looking at it. And I really tell most of my clients, if you're happy with what we're giving you, just take it. We can always refinance later on. But if you're happy and you don't want it to go up more than you want it to go down, then you should just lock it in and take what you can get. and know that there's obviously opportunities to lower it eventually.
Right. The other factor that maybe a lot of people aren't aware of is the Fed chair themselves doesn't decide whether to cut the rate or not cut the rate. It's part of a 12-person committee, and the Fed chair is one person on that committee.
Yes.
However, they do bring plenty of other soft power to the table. They can set the agenda, and they can
and they're the
other
ones
things that may influence.
They're the ones that also give the talk after they have the Fed meeting. They're the ones that lead the talk, and they're the ones that are scrutinized based upon what they say, and that's what affects the market more.
Right.
And they will always, like in some of the places that I get my information from, these subscriptions that I pay for in the mortgage industry, they will look at previous statements and compare it to the current statement and then try to figure out, okay, based upon what was said before and what is said now, what's the difference? What is the tonality? Where would this be going? Because we do try to think ahead, but again, there's no way to know.
Yeah.
So the Fed funds rate does not set mortgage rates. Again, let me say it. The Fed funds rate is not it does not set mortgage rates. Mortgage rates are set by the mortgage-backed securities and how they're traded. The Fed funds rate is an indicator into where rates are going to go, but it is not the setting of the rate.
Okay.
So it is. I do get that a lot. I do get people asking me, "Oh, the Fed just raised rates, or the Fed just lowered rates. Are rates going down, or are rates going up?" No. Again, I think we talked about this last week, that there's usually a lead up and we know what's happening beforehand to when they're going to talk after the Fed meeting. But there are definitely correlations. And what's going to happen potentially is our rates are going up now, right? We're at 8th month high, and that may be because they're thinking that the Fed may increase rates.
Right.
So again, everything is a preliminary. It's an indicator of what's to happen, and we usually follow suit, or sometimes happen beforehand.
Right. I remember we were talking last week about that, about how a lot of times the rate changes are driven by speculation, what they think is going to happen. If they think that the Fed's going to cut rates, then the rate goes down before that announcement.
Yep.
So a lot of it is driven by speculation
Correct.
and what they think will happen.
Yeah.
Not necessarily when rates get cut, that's when it happens.
Yep.
Necessarily.
So, it is so important for somebody to make sure that during the process, because somebody may be looking for houses now. It could take them 30 days. It could take them 60 days. It could take them 90 days. It could take them a while to find a house or even go under contract because, again, like we're going to talk about the perfect offer, there are a lot of clients putting offers on multiple houses and getting outbid. It's just the situation right now. And so and I would say right now, out of the people I'm working with, there's some that are getting them really fast. Like they go out there, they see a house or a couple houses the first weekend, they put offers and they get them, right? That's on the slim end. The majority are taking longer to find houses, to get into houses, right? To get their offers accepted. So it's always good to make sure that you're talking to a mortgage professional that is giving you, hey, here's where rates are now. Let's look at where rates, if rates go up, here's where your payment will be. So that way you are anticipating that if the rates do go up, where your payment, because we don't want somebody to be house poor. We want to put somebody into a house where they can feel comfortable with that payment. Because again, when we look at their debt to income ratio, we're not looking at all their bills, only what's on their credit report. So we want to make sure that whatever is out there, that they have comfortability in what their payment is now and then what it will be if rates do go up.
Can a home buyer, if they think that rates are going to be going up, can they lock in their rate even if they haven't found a house yet? So
there is a lock and shop option that some of my lenders have, but you take an extended rate lock. So you have a 60-day rate lock. You have 30 days to find a house and 30 days to close, right? That time frame is not always conducive, right? But also you're taking a 60-day rate lock when everybody, for the most part, when they go under contract and they lock in, the rates that we talk about or you see on, bankrate.com or some of these other sites, they're based on a 30-day lock. Sometimes they even, on these other sites, to quote a lower interest rate, they'll quote you on a 10-day lock, right? And we know you're not closing in 10 days, so obviously it changes. But a standard rate lock is 30 days. So the lock and shop doesn't really work. Most people are not doing that because you're locking in at a higher rate anyways because you're keeping it for a longer period of time.
So what if someone has a rate lock and rates go down? Can they
So yes,
get the lower rate?
so there are some of our lenders do have a float down option. I always say to my clients, you can have your cake, you just can't eat all of it. You can eat some of it because most of them, there's a cost, but the cost is built in. So if the rate goes down 0.25%, they'll usually split the difference and give you an eighth off.
Okay.
Right? So there are opportunities for that to happen because there is a cost. I mean, they're saying, hey, wait, so you want me as a lender to give you a rate, we'll lock you in a rate. If the rates go up, we're out of luck. But if the rates go down, you want it, right? So there are those opportunities to float down, and our lenders do have that float down option. So I do tell my clients, but I'm like, don't bank on that because you're not going to get that lower rate that you may see out there because you've already locked in. So basically you're telling the lender, hey, I don't want any higher. So, but it is out there, and I do lead with that. But for the most part, I say, if you're happy with this rate, just take it. Just take the rate, take the payment, because we also...
It's not really happy, but if it works for you, if you can afford it, don't assume that rates will go down. You don't want to take a higher rate or a higher payment with the assumption that, rates will go down eventually, and I'll just refi and it'll be a lower payment. We don't know when that's going to be.
We don't know.
It could be 5 years,
That's
10 years.
why if you're happy and you're comfortable with the
Right.
payment now...
You have to be comfortable with that payment at that interest rate.
But just know that we'll be watching, and if the rates do go down, you can refinance. But you don't also... The reason why you're taking the lock now is you don't want it to go any higher than it is.
Yeah.
Because
how does PMI factor into this?
PMI is just a set number.
Okay.
Based upon your credit score and how much money you're putting down.
Okay. Let's talk about that real quick. PMI, principal mortgage insurance. If you own less than 20% in your house, the mortgage company takes out an insurance policy on you.
In case you default.
And guess who pays the premiums on the insurance policy? The homeowner.
Correct. And nobody likes insurance.
Yeah.
And I always tell people it's a necessary evil. Nobody likes it. It's just unfortunate.
Well, yeah, we have insurance. You have homeowners insurance. You have health insurance.
Correct.
You have disability insurance.
But you're hoping that you never use it.
But the bank taking an insurance policy on you that you're going to default on your loan.
Correct.
Not the kind of insurance kind of premiums that you want to be.
It's even worse, right? Because nobody wants that, right?
Right.
So unfortunately, there is no way around. I mean, there are. Okay, I shouldn't say unfortunately. There are ways around it. Some of the lenders have what they call lender paid mortgage insurance, where they will increase the rate a little bit, so that way you're not technically paying mortgage insurance or the PMI, right? There are some programs that don't offer, like we have doctor loans that don't even offer mortgage insurance, right? So again, there are opportunities. Unfortunately, for most of my clients, and that's what I was saying, unfortunately, they fall into the category of, hey, I'm going to have PMI because I'm putting down less than 20%.
Right.
The good thing that I tell people, PMI is not expensive anymore unless you have bad credit. Okay? Or less than perfect credit. It's not as bad. So when I ask people, I'm like, so what do you think PMI, as I'm going to figure out for them, I'm like, so what do you think it is? A lot of times they think it's over $100. And there's times where I'm coming back and I'm like, nope, $34. They're like, what? And they're only $34? I'm like, yes. They're like, okay, good. I'll take it. Like, so it's...
I feel like I was paying... Before I hit 20% equity in my house...
Well, who did your loan?
You did.
Oh, that's right. I was just trying to give you a high PMI.
Yeah.
I just figured I'd do that for you. No, they
but
were...
it can go high. I mean, it can be much higher.
It can be. But again, it depends on how much down you're putting, your credit score, and whatever else. So it's different for everybody.
Okay.
But over the years, it has definitely gotten a lot cheaper.
Okay.
And not every bank is the same. So I have some lenders as a broker. I can go shop. So not only do you want to look at the interest rate, but you also want to look at, when you're shopping, you want to look at PMI.
Yeah, you have to look at it holistically.
Because there is a whole there's a whole picture that you have to see. Where is it going to be best for me? And if you're paying PMI for the next 7 years, because that's when you're going to get to 20% equity in the property if you never refinance, that does play into your interest rate too, right?
Right.
Because it is a percentage of your loan amount. So it is an interest rate. So I do have some of my lenders that I work with have some of the lowest PMI that's out there. So I do see clients that will shop and they'll come back to me and maybe they have 0.1% lower in an interest rate, but their PMI is double than what mine is. And I say, well, your rate is only $12 more with me, but my PMI is $30 cheaper. So in hand,
You have to look at
I'm
it
actually,
holistically.
yes. So
Right.
we have to look at that. But I just know when I'm quoting my rates, because my rates are pretty good, I would say they're some of the best out there. Our PMI with most of our lenders is on point, is very, very good.
Okay. And we were talking about that in one of the previous episodes, that I think there's a lot of misconceptions that a lot of people think that you need 20% down
Correct.
to buy a home, period, which is definitely not true. 20% is that mark for PMI. Once you have over 20% equity in your home, you don't have to pay that PMI. So for a lot of people, it's beneficial.
Yeah, I mean,
to hit
there's
that 20. But once you're over 20%, I don't feel like there's really any benefit other than if you just want to get the payment to what you want it to be, to putting more down.
Yeah. So I always have a conversation, and I know we're getting off topic a little bit, but like I always have a conversation with my clients that come to me and say, "Oh, I want to put 50% down."
Yeah.
And I have to say, "Well, where do you want your payment to be?" And I ask them before, because a lot of them don't know what the payment will be, but I ask them where do they want it to be, and a lot of times they'll say the payment is higher than what it is actually going to be at 50%. And I said, we have to talk to your financial advisor. We have to talk to your accountant. We have to talk to the people that are in your life that know you maybe even better than I do, because I'm just talking to you now, but have been working with you, and they know when how much taxes you're paying. They know when you want to retire and how much money you want. And maybe it's saying, okay, let's not put down 50%, let's put down 30%. And let's take that extra 20% and put it in the market, where hopefully you're making more money in the market than you are paying in interest on the mortgage. So there's, again, a holistic, if we keep coming back to holistic, there's a holistic approach that myself and other professionals a lot of times will take when it comes to this, right?
Yeah. We were having these conversations a lot when
Yeah.
rates were low and people were putting a lot down in their house. And I would say,
Why?
put down 20%, put the rest of your money in the market. You can make better than 3%
Correct.
in the market.
And I tried, there's just people that they only care about having the equity in their house, and they only care about having the lowest payment.
Right. Or there are people that have the feeling like, I don't want to owe anyone money.
Correct.
I don't want to
Which is
I
still
don't
there.
have any debt.
Which is still there. And
Yeah, which I understand.
there's a guy, Dave Ramsey, who's out there who promotes no debt, right? And I'm not saying he's right or wrong. I think it's more situational, because, again, I think it is something that you need to have a team of professionals around you that are looking out for your best interest and that are looking out for where you want to be. And so I think it's not just no debt, no debt, no debt, because the mortgage is the best debt that you're ever going to have.
Right.
But again, I understand, and I'm never going to tell somebody they're wrong, because that's how they feel. Right. That's their belief, and I will do whatever I can to help them achieve that belief. If they want to be debt free, here's ways to do it. Right. Sometimes we take out cash out refinances, pay off debt that they have on top of their mortgage. Sometimes they save $1,000 a month.
Right.
I have them pay it off. Maybe their rate goes up a little bit, but they're still saving $1,000 a month by combining all this stuff. Take that $1,000, start paying that towards your principal, and you pay it off faster. So I will go through this with our clients to really try to figure out where do they want to be in the next year, 5 years, 15 years, how fast they want to pay it off. It is a strategy.
Yeah, I think that's important.
But again, you don't have to put down 20%. There are zero down programs like VA for veterans, and USDA, which is rural development. And then there's also some other, every state, Some local communities, they have like in Michigan, MISTA, which I think we talked about before, which is the Michigan State Housing Development Authority. They also help as well with no money down programs. But the standard conventional is 3% down.
Okay.
And I try to get clients to understand that they can also take money out of their 401k because they're paying themselves back. They can take a loan against their 401k. And a lot of clients are coming to me not really understanding that. They didn't even know. I've had multiple clients in the past couple months that did not know, and when I got them to take out more money, guess what happens? Now they can put more money down on their purchase.
Yep, payment goes down.
Payment goes down, but
Right.
when they're making an
EMI goes
offer,
down.
but when they're making the offer, the biggest thing is when they're making the offer, now they're in the game. Before, if they were putting down 3% and they're going against people that are putting down 5, 10, 15, 20 or more, their 3% is going to get shut out.
Right. We'll get into that when we talk
So
about
we'll
perfect offer.
exactly. But that's
If you're
why I
putting
was trying
0%
to say.
down, and there's a good chance
Correct.
your offer is not going to get accepted.
Correct.
But
And that's why I was trying to say this
Yeah.
is going to be a great segue to our next topic
Yeah.
after.
okay. The other weekly update we want to talk about, that was really good information, Jeremy. Thank you.
Thank you.
Is this is kind of funny. I love it when
when
billion-dollar companies
sue each other. Yes.
and
Yes.
just let
We
them
were
duke
talking
it
about
out.
this, yes.
Yeah. So Zillow is suing Compass.
Yep.
For those that don't know, Compass is a massive real estate conglomerate that owns Coldwell Banker, Century 21,
Better Homes and Garden.
Better Home
and,
Garments,
Sotheby's.
Sotheby's, bunch of companies.
Yep.
And Compass had previously sued Zillow because Zillow was refusing to put private listings on their website.
Yep.
And so Compass was saying that you're a monopoly and you're not letting us do this and you're controlling the market, best for consumers, blah, blah, blah. Like these companies care what's best for
they do
consumers. And so they sued. And they dropped their suit because the judge said it didn't have
It didn't
any
have.
legal
It didn't have
merits.
merit. No.
So, okay, so now...
So they withdrew. I guess they put their head in the sand and they withdrew
Right.
their lawsuit.
Right.
However,
So fast forward
now
Zillow is suing Compass.
it's like, don't sue us because
Yeah.
we'll find something against you.
Right.
Right. You know?
Alleging Compass is hiding listings by keeping it on their website and not publishing it, on Zillow or MLSs or whatever. So
Yeah.
I think this is a huge topic for another episode, and I want to see how this plays out, kind of maybe before we dive into it. There's been a lot of controversy back and forth about private listings, whether that is good for the consumer, whether that's bad. I think like we've
So
talked
private
a lot,
listings, again, for people that are listening, are more pocket listings.
Right.
Listings that agents, I don't know if they say they hold on to them, but they definitely market them to people that they know.
Right. So I'm a realtor.
Yeah.
I have a listing. I don't put it on the MLS. I don't put it on Zillow. I don't publish it anywhere. I just sort of shop around
market to
people that I know.
sphere of influence or people in your office or other offices.
Or maybe it goes on my personal
website
or my broker's website. And that's it.
Yep.
So I think we should do a whole show on this. I have my feelings about it. And so we'll see how this plays out. But basically, these are just billion-dollar companies arguing back and forth about what's best, what they think is best for the consumers, because that's what they're thinking about.
And yes,
I'm
and
sure.
we know that there's another lawsuit out there that we're not going to talk about, but it is between the two biggest lenders that are one's located 30 minutes south of us and one's located about 30 minutes north of us. And again, it's the same thing. Right. And I'm not going to weigh in on who's right, who's wrong, what's going on. But, unfortunately, this is just kind of the times.
Right.
It's litigious times. People can sue for
and
anything.
And it's a lot of lip service, but I
yes.
don't know that anyone's really thinking about what's best for the consumer. I think that's just me personally.
Yeah. We hope that the consumer in the end comes out ahead.
Right.
We just hope for anything, anytime a lawsuit happens, whether it's in the real estate, mortgage, or whatever it happens, we just hope that the general public, they actually come out ahead, and I really do feel that that's going to be the case.
I hope so. So that's what's going on in the news. We'll keep tracking this story. I'm really curious what happens, how this develops. and we'll see where it goes from there. Okay, so let's get into the nitty gritty. In this episode of Inside the Offer, we're going to talk about what makes the perfect offer.
Yes. We were.
I could talk for hours about this.
I know. We were trying to have is there a perfect offer?
Yeah.
And
well, the one that gets accepted.
Correct.
That one's a perfect offer.
That's usually what I.
So
go
if
back
anyone,
to.
Maybe it's been a while since you've made an offer on a house or you've put your house on the market and received offers on your house. But I think it's important to just sort of break it down step by step. And because for everyone it's different. It's really a case-by-case basis. Cash offers are great. Mm-hmm. Obviously, not everyone can do it. I think the last stat I heard was 19% of offers were cash. Was it more than that?
Yeah, I thought it was in the 30.
It's in the 30%.
Yeah,
Wow.
I'm pretty sure because I checked the numbers a lot, and it looked like they were pretty. It was pretty high. Somewhere in the 30% range.
I'll have to look that up.
Yeah.
But anyway, it's high. But
apparently, there's a lot of money out there still.
Yeah. People are sitting on cash, or they're getting help from family, or whatever.
Which is what I'm finding as well.
Right.
I have clients of mine that come back and be like, "Hey, my parents bought the house for me. Now I need to pay them back. Can I take out a mortgage for that?" And this is the largest transformation of generational wealth going on at this point in time. So this is where you're seeing a lot of cash being put into the market and being, and again, transferring from one generation to the next, saying, I'll buy you a property and then you pay me back, whatever it is. But, it's going to continue to happen. And so.
Right. So it's important to point out, like I say, if you haven't written an offer in a while, when you submit an offer on a house and your agent should be in communication with the listing agent saying, hey, I'm submitting an offer. Have you gotten other offers? Just trying to feel them out. I mean, anytime I'm going to write an offer, I'm reaching out to the listing agent and getting any information that I can. Do you have other offers? Yeah. Are they cash?
It's
Are they
a must.
both asking?
Yeah.
Most of the time, they won't tell you very much.
No, they will not.
They will say, we have multiple offers. They may tell you it's over asking. They may tell you that they have cash offers, and that's it. They're very rarely going to give you a number.
Correct.
It's not like you go to an auction for a painting and says, I'll pay $10 million. Yeah. I'll pay $15 million. I'll pay $20 million. You don't know what the other person is offering.
It's a blind auction.
It's a blind auction.
Yep.
So you have to just walk into that knowing that.
Mm-hmm.
So,
and unfortunately, there are people still to this day that I talk to that get angry at their agent because they think that their agent should know what the highest offer was,
right,
and that they should be setting their client up for success and making sure that they make an offer higher than that offer. And it doesn't. It's not.
And you just don't know. And you don't even know if the information you're getting from the listing agent is accurate.
Correct.
I think for the most part, it is.
If you do get it, I think it is accurate.
Yeah, I think for the most part, people don't lie. Sometimes they do.
Yeah.
And a lot of times it's obvious.
Yeah.
But I think for the most part, people tell you the truth when you're asking for what the other offer is. So you just have to know that walking in that you're not going to know what someone else is offering.
Yep.
So it's important to know that. Now, if it's a house that's been sitting on the market for a while, different strategy, right? So
Correct.
different houses are going to have different strategies and different offers. So there's no one perfect offer. So, but we want to sort of dive into what the elements are that will make your offer stand out from everyone else's.
But I also say the perfect offer for you is the best offer that you want to give.
Right.
Because you may not be able to give the highest and best, which, again, that goes into something that we'll probably talk about, which is highest and best, right? But your highest may not be the best, but it was your perfect offer because you checked all the boxes for you. And we always try to say to our clients, and you'll probably get into this here soon, make an offer that you can sleep with at night.
Right.
That if you don't get this house, you are not going to be upset.
Yeah. I give similar advice too, where like if there are multiple offers, we don't know what other people are offering. I said, put in a number that you can live with, that you're comfortable with, that it's sold to if it's sold to someone else for $1 more, you can
Good
live
for
with
that.
that.
Good
you
for
can
them.
live with that.
Yeah, exactly.
I think that's the best approach.
Yep. So that to me is the perfect offer because it's perfect for everybody. And you can't, again, I deal with a lot of clients that just get so upset. And one, it is an emotional transaction. They already see themselves there, whatever it is. it is hard.
Yeah.
But it's go with your best foot forward.
Yep.
And so go ahead. Tell
Okay.
me what
So
else.
before you even write the offer, or before you even get there, you need to have one thing that's very important. You either need your pre-approval letter or you need proof of funds.
You need to be pre-approved?
Yeah. Yeah.
Oh.
Before, yes.
Before you make an offer?
Yes.
Oh.
Yes, you should.
Yeah.
Thank you for
I'm
asking about
just
that.
surprised because so many people don't think they need
Yeah.
to be
Well, what
pre-approved.
if you go see a house that just came on the market and it's a Friday and you don't have a pre-approval letter and you love this house and you want to put in an offer?
Can't you just submit an offer without a pre-approval and tell them it's coming later?
No one will take it seriously.
Oh.
You have to show that you have the funds to buy the house
Yeah.
with the offer, or otherwise the seller's not going to take you seriously. So before you even write the offer, you got to have that pre-approval ready to go.
Yes, you do.
Or you have to have your proof of funds if you're paying cash. Show that either a screenshot from a bank account. You can black out the numbers.
Yeah.
You don't have to any sensitive information, but just show that that money exists
Yep.
in an account somewhere.
Yeah. And there are people that come to me and they're like, oh, my agent told me I had to call you because we're ready to put an offer on a house and I didn't realize I had to be pre-approved yet. And,
Yeah.
it's like,
It's a process. It can take a few days. And if it's a
correct.
Friday,
well,
then
I got it covered. So
Call
but
Jeremy.
Call me. I like to say I work 24 hours. Do I? No.
no one should.
Nobody should. But we can do it. I mean, there are times where it doesn't take that
But you
long.
shouldn't. I mean,
But yes, but
realistically, no
but
one
if
should be calling
somebody
you on a
is
Friday afternoon
correct.
for a
but
pre-approval letter.
But if you're self-employed, I need to see your tax returns, right? Can we do it with the tax returns, or do we have to do a bank statement loan? Because as a self-employed borrower, we know why
Right.
you're self-employed, right? You want to write off all those goodies,
Right.
So
Or
that you don't
maybe-
pay taxes.
Or maybe you're in a business where you accept a lot of cash.
Correct. So we have to look at your bank statements to show how much is being deposited. So we can't do that in 5 minutes.
Yeah.
But if you are salaried and you don't have a lot of debt and you have great credit, yeah, that's a pretty slam dunk, easy, pre-approval that we can do really fast.
Right.
So,
but why risk it?
that's what I say. There's no point in risking it. Let's just get it done.
Right. From the very get-go, if
Yeah.
you've reached out to an agent or maybe you're looking at houses on Zillow, get that pre-approval. So it's just one less thing you have to think about if that perfect house does come along.
Realistically, and I know it doesn't happen that way, they should be reaching out to a mortgage professional first,
Yeah.
before
That's true.
ever reaching out to a real estate agent.
I agree with
because unless, again, like you said, you're buying it cash, if you don't have the cash, you have to get a mortgage. You should be getting pre-approved first because that is the best foot forward when you're talking to an agent, whether it's your agent that's going to be submitting an offer or whatever else. You need to have that pre-approval in hand so they know that you are serious and you can do it.
Right. Now, how long are your pre-approvals good for? So if they get a pre-approval and they don't buy a house,
90
they're
days.
looking for a while.
So it says 90 days. Okay. But what if somebody loses their job in the 90 days? So I always say it's 90 days on there with a grain of salt, right? Because there are certain things that can affect a pre-approval.
Sure.
I've had somebody lose their job. I've had somebody that spent their down payment money, right? There are things that happen within those 90 days.
right.
But
But the pre-approval itself.
the pre-approval itself is
and it's not a mortgage approval. It's saying we looked at your finances.
based on your finances
we think we
of
can
that
give you a
day,
loan, right.
but we are going to re-verify during the process of a mortgage. We're going to re-verify it. However, like I said, if somebody loses their job before they're making an offer, if I've had a client that has had a pre-approval out there for a while, I'm always calling them and making sure. Even we call them pre-approved and looking, our pals.
Mm-hmm.
I'll call them usually every Thursday. Hey, what are you seeing this weekend? Do you want me to run any numbers? Anything change that may affect your pre-approval? Mm-hmm. That's what good loan officers
And do you have that conversation with people like, don't take out a car loan, don't
No, I tell them to.
Oh, you do?
No, I'm just kidding.
Okay.
Yes, I tell them, please don't change your job. Don't quit your job. Don't do this just because I got you pre-approved. Don't go charge up credit cards or whatever else unless I tell you, because sometimes their credit needs to add a credit card, right?
Okay.
Sometimes there are certain things that they need to do in order to boost their credit score, whatever it is. I will let them know.
Okay. But outside of something
But
specific
outside-
like
yes.
that, no
I'm
major
telling you, yes,
purchases.
Correct. And I
No-
tell them that not even then, it's even when you're under contract. Don't go buy your furniture yet.
Right.
Don't go do these things. I understand because it's tough because you want to go buy your furniture.
Right. Maybe you want to move in day one and have the furniture
and
delivered day one.
There's sales. Like I always love it when I'm talking to somebody like around Thanksgiving. There's the Thanksgiving sale and whatever else. Like I get it. I said have somebody buy it for you.
Right. And pay them back.
And pay them back or something, whatever it is.
Yeah.
But you really shouldn't be making it. Or if I see that they can afford it, go ahead and do it. Just make sure you give me the information because they're going to ask for it, right? Give me some kind of statement that shows how much you owe and what the payment's going to be so that we can make sure it goes into your debt-to-income ratio, right? Because they will find out because they will see that there's going to be an inquiry on your credit report.
Right.
So,
and getting a pre-approval letter, does that affect your credit?
no.
Okay.
We will have another episode about credit because that can take forever for me to go over what credit is and how it works because everybody still has this preconceived notion because it has been put out there that if you have your credit pulled and if you have it pulled multiple times, they're going to lower your score.
Right.
That's not true. Especially if you're getting it pulled by a mortgage company. You're allowed to shop around for mortgages. Now, if you're going to go get because most of the time when you shop around for mortgages, you're only going to go get one mortgage, right? Mm-hmm. They know you're shopping for that. You're not going to go out there and buy 3 houses.
Right.
It's not going to happen, right? But if you go pull your credit report or go get a credit card, you can go get 3 credit cards. Because if you get a credit card for $1,000, another one for $2,000, another one for $3,000, those are easy to get, right? That's taking on more debt. Mm-hmm. That's why your scores will go down. Is if you go to Chase and then Bank of America and then you go to wherever else you're going to go to get a credit card, that's going to affect your scores.
So applying for credit cards, that can affect your score, but getting a pre-approval,
correct,
not going to affect.
It's not.
Okay.
However, if I pull a credit report today and then somebody says, in a month from now, oh, I'm going to go shop somewhere else and I'm going to have them pull. Well, their scores are different because every day your scores change because every day something different reports.
Right.
So if I pulled your report today and you're on time with your payments, but next month you go and have somebody else pull your credit report and all of a sudden something else reported and now you're late, now your scores are different. So it's not because they pulled your credit report that the scores went down, something else happened. And so that's the reason why I tell clients, like, you have to be cognizant. So anytime someone pulls your credit report, keep making your payments. Keep doing what you need to be doing because if somebody else does, which, I'm hoping that nobody's going to have their credit report pulled by somebody else after they talk to me, but that's really what it is.
Okay.
So credit reports are good for 120 days. That's why we say our pre-approvals are good for 90 because you have 90 days for pre-approval to get into a contract, then 30 days to close. Mm-hmm. 120 days.
120 days.
So that's where the 90 days comes in for the most part. But like I said, there's other things that can derail a pre-approval if that happens.
Okay. So that's really step 1 of the perfect offer.
Correct. But again,
have that pre-approval ready to go.
Yeah.
Have that proof of funds ready to go. Have a great mortgage lender who is going to explain everything to you and so you know what you're walking into with your rates and your payments and all that stuff.
And strategies.
Right.
And then making sure that the loan officer is speaking with the real estate agent because they all got to be on the same page. And depending on the offers that they're going to make, you may have to dial back the pre-approval or add things to the pre-approval, subject to selling a home or that not contingent upon the sale of the current home. Or, there's other things.
Right.
There's
we'll
a lot
get
of
into
things
that. Yeah.
Yes.
Yeah. I have some details on that we'll talk about. This might have to be a 2-part
this could be a 2-part.
series
Like I said,
on the offer.
there's a lot of stuff that we can go over because they need to know this. And the amount of clients that call me that don't know this, one, I think part of it is because I'm not saying every agent's bad, but there's a lot of agents that are part-time. And I'm not saying a part-time agent is a bad agent, but they do get some misinformation or less information from some agents. And I know some full-time agents that also may not be the best. They're living in the past or whatever it is. And I talk to clients and I'm like, wait, your agent didn't discuss this with you? What's going on? Like, why is this not happening? Right. So, but the moral of the story is your lender and your realtor need to be on the same page.
Absolutely. They're a team working for you.
100%.
Absolutely. So, okay. So the buyer, they've gotten their pre-approval, their proof of funds. They looked at houses, and their agent has been in touch with the listing agent. and they're ready to move forward with an offer.
Yep.
So I pulled up a couple things on my computer. I have an offer here that we can break down, and then me personally, I keep checklists of all my transactions, so I don't miss a single step.
Yep.
So I have my checklist up here, so we can go through that, and I want to include a few things. We'll throw in the keys of the deal, a few things that I put in offers that I don't really see any other agents doing, that maybe could help.
Do tell.
Yeah,
Or do
yeah.
not
We'll
tell
some
if you don't
secrets.
want to tell some secrets.
So the first step when you're putting the offer together, and every office has slightly different purchase agreements, but I think for the most part they're pretty similar in terms of the concepts.
Yes.
Some of the wording might be a little bit different. I think everyone should read through these contracts. They're not more than 4 or 5 pages usually.
Yep.
So read through it. Everyone should understand what they're signing and what they're going into.
Well, the best thing is just put it in ChatGPT now and make
true.
sure that, hey, is this a purchase agreement that is for the buyer or?
But chances are, if you're working with a major brokerage,
100%.
I work for Max Brook. They're owned by Real Estate One, they're the largest independent real estate company in Michigan. And they are constantly tweaking their purchase agreements because they have lawyers on staff.
Yep.
So when things happen, when lawsuits happen, whatever, they're constantly tweaking their purchase agreements. So I know we have a system. I know when I pull up a purchase agreement, it is the most up-to-date in terms of legalese and whatever is going on. I know that this is an up-to-date purchase agreement.
Correct.
But I would, again, encourage everyone to read what they're signing.
Yep.
You need to know what you're signing. So like for me, like when I write an offer, and if it's someone that I haven't written an offer for, I will usually put it together, send it to them to review. Let me know if you have any questions, whatever, and I'm happy to review it with them if they want. And then once they're good with it, then I have them sign it.
Yep.
But I don't think you should here's the thing to sign, and I think that all buyers should have a chance to review it first. That's me personally. So, okay. So the first part of the offer is you want to write in all the things that are included with the purchase. So appliances, refrigerator, stove, oven. Literally, I heard a great analogy. I don't know if this was when I was in real estate school, whatever, that if you could pick up the house, pull upside down, and shake it, anything that doesn't fall out typically stays with the home.
Yep.
So that would be like blinds or shelving, or a big contentious thing can be TV mounts.
TV mounts.
TV mounts have to stay.
Yep.
The TV that is
on the
connected to the mount can be removed.
Correct.
But the mount itself has to stay. That's really important. I've put that in there before just so there weren't any confusion about it. So TV mounts have to stay. Mirror, let's say you go into the bathroom, sometimes the vanity, sometimes it's attached to the wall, sometimes it's not.
Yep.
There's a mirror on the wall. Typically all that stuff stays.
Ceiling fans. I've
Ceiling
seen
fans.
everything.
Right.
There's a lot of things that clients of mine or just any buyer thinks would stay with the house, and the seller thinks that they're taking, right?
Right.
So you have to make sure it is talked about and put out there
In writing. So
because
in the MLS, there's usually a list of appliances.
Correct.
I will copy and paste that list into my purchase agreement. So that would be dishwasher, disposal, if they have washer, dryer, stove, microwave, stuff like that. If there's anything I'm just not sure about, like let's say they have multiple fridges. Mm-hmm. They have the kitchen fridge, they have a basement fridge, they have a garage fridge. Yeah. You want to specify what is staying. Because if you just put fridge,
correct,
they could take their $10,000 Sub-Zero fridge and leave you with a $200 fridge in the garage. And you said, well, you put refrigerator in there.
Yep.
So it is very important to be specific about what's staying.
And then if you don't want it, make sure that it said, hey, we don't want the fridge.
Right.
Because sometimes I get to the closing table and somebody's like, well, I didn't want that fridge. And they're like, well, we're leaving it for you. Well, yeah, but in the purchase agreement it said this fridge is staying, but it didn't specify to remove this fridge. And now the client's like, but I don't want the fridge, right? I thought, so again, it is something that's really important.
It all needs to be spelled out in the purchase agreement, because if there are any issues down the road, you're going to take someone to court. All they're going to care about is what's in the purchase agreement.
Yep.
So it's really important that's mapped out very specifically and intentionally of what items are staying and what items are leaving.
Yep.
So that's really important because this doesn't become an issue, at offer accepted,
No.
Appraisal or
No, it's the
or
issue at
whatever.
closing, and
it's
that's
at closing. It's the
that's
day before
yes.
closing
Yes.
that you're having these issues.
When you have a walkthrough and you're like, wait a second, why is that still here? Or wait a second, why is that gone?
Right.
I mean, somebody actually took one of my clients. They actually took the light post outside.
Wow.
So the
Really?
question is that or isn't that something that should stay?
Right.
As
And
well as
why?
I have not seen this happen before, so I was
Oh,
surprised.
dude, all kinds of weird stuff. I had a client that this is probably $700,000 house, and there was a I think it was a cherry tree, some kind of tree in the backyard, and the seller wanted to be able to come anytime they wanted
and get cherries.
and get stuff off this tree, and I was like, no. Let's come up with something. So we came up with an agreement that once a year, and
Really?
I'm sorry, I should back up. This tree had some sentimental value
Yeah.
because the owner's dad planted the tree or it came from their deceased
and
father, something.
And you can't just take the tree now.
Right. So I'm sorry, I should have said that. So there was like a sentimental attachment to this tree. So we came out, and this was in the purchase agreement. I think it made an addendum to the purchase agreement that the seller can come back once a year with 48 hours notice to come and take whatever they wanted from this tree.
Yeah.
So we put all that in there after all this. They never once came back to get anything with the tree ever. But
it was there.
But it's an example of
Correct.
just things that you have to be aware of. And you don't want this to be an issue the day before closing.
Correct. And this was an issue at closing.
Right.
Because they went, technically it was an hour before closing because they went for the walkthrough right before the closing, and they were driving there. So obviously the real estate agent was on, the buyer's agent was on the phone with the listing agent going, so we know that there was a light in front of the house and now there isn't. Where is it?
Heck happened?
What happened?
Right.
And so, it unfortunately, I think in that case, it was hard to really understand or think that was going to happen. So you would think that is just something that stays with the house.
Right.
But I don't know. Maybe if you really like the light post or you want the light post, maybe you got to put it in there. I don't know.
That's weird. I've never heard of anyone taking a light post.
I haven't either. So
if the seller wanted to keep that light post, if you're a seller and you want to keep that light post, and sometimes they're like, this door is sentimental. Look, I've had this door from multiple houses. That's been a thing I've seen. Stuff like that. Just talk about it ahead of time.
Yeah.
As long as everyone is on the same page ahead of time.
Normally
and you negotiate it.
Yeah.
A lot of this stuff can be fixed. You can get stuff from the tree.
Yeah.
You can get your light post, whatever. Just discuss it ahead of time so it's not an issue.
But like you said,
right before.
put it in writing.
Put it in writing. Absolutely. Put it in writing. Because if this does have to go to small claims court in front of a judge, that is all they will care about. They won't care about an email back and forth or a conversation. All that matters is what is in the purchase agreement.
I know. And I do have clients that are afraid to put certain things in the purchase agreement because if they're going against multiple offers, they are afraid to ask for certain things because that may set off the seller and have them accept somebody else's offer.
It's a balance.
So it's a balance. So when we're talking about the perfect offer, put it in there, but know, again, can you sleep at night that if you make that offer and they don't take it because of what you put in the offer, you're okay with it.
Right.
So that's where we always talk about what is the perfect offer to you.
Right.
So put it in writing, but only put in writing what you feel is the best for you.
Right.
And so sometimes it is like letting the seller take their mounts of their TVs. Because guess what? I have a TV and those mounts may not be right for my TV. Right. I have the mounts that come off the wall and you can kind of turn them and whatever else. I don't want just a stationary mount, right? Take your mount. I don't want it. So please, so again, it's having those conversations. And I had those conversations when I bought my house last time. And I said, I don't want those mounts. I'm having my own.
Right. And we're bringing this up because these are real life issues that we've had to deal with personally over the years. So we don't want anyone caught up in all that. So, all right. So the next step after you've included or not included what's in the sale is the mortgage. Either you state whether it's a cash sale or a mortgage
Contingency.
So built in the purchase agreement is a mortgage contingency. So if for some reason the mortgage doesn't get approved, or like buyer loses their job, it doesn't appraise, whatever.
There is an opportunity to be released from this contract.
From the purchase agreement, right? Exactly.
And so it is. I mean, this part is important because there are times where my client did lose their job or something happened, and I had to provide a denial letter because now they're denied a mortgage because they don't. If you don't have a job and you don't have any money, you can't buy a house, right?
Right.
So unfortunately, that is again a necessary evil.
It's necessary. It's rare that it happens.
Correct.
I'd say the most common way that this contingency is applied is because of appraisals.
Yep.
That's really the main thing.
Yep. If it doesn't come in, you have a few choices.
Right. So I mean, just to back up. So let's say a buyer is buying a house for $500,000,
Yep.
and they're getting a loan. The bank sends an appraiser to make sure that house is worth what they're paying for it.
Correct.
Right?
I wouldn't say we can say the bank sends an appraiser, but the bank doesn't send the appraiser. There's an appraisal management company.
That after 2008,
yes,
the government said that banks should not have any communication
correct.
or anything with the appraiser. And I get it.
Yep.
Fine.
So that's why I want to make sure you clarify that
Right.
the bank doesn't send the appraiser. There's an appraisal management company, and there's a round robin usually at the appraisal management company, so we don't know who it is, and they go out and do the appraisal because it's got to be independent. Right? And we know, and I'll say this all the time to every client, we can order 10 different appraisals from 10 different appraisers and get 10 different values.
Oh, the stories I could tell you.
There is no...
The stories I could tell you
I
about
wish.
appraisers.
I wish there was some kind of general rule of thumb when it comes to how they do their adjustments, but there isn't.
It's infuriating.
Okay, I shouldn't say that. There is a guideline, but I've seen some appraisers say $5,000 for this bathroom or $7,000 for. So again, there's a lot of nuances when it comes to appraisals, right?
Of course.
But yes, if the purchase price is $500,000 and it comes in at $490,000, there are opportunities for the buyer and the seller to get out of the process.
Right. So if it appraises, so you're buying a house for $500,000,
yes.
It appraises $490,000. That means you're only getting a loan for $490,000.
Well, based on the $490,000 price.
Right. Exactly.
So if
they're
you're
not going to
down,
give you that $500,000.
So if you're putting down 20% of $500,000, now you're putting down 20% of $490,000.
Right.
However, now we still got to figure out that extra $10,000.
Exactly.
This is where the buyer or the seller can get out of the contract, no harm, no foul.
Right. And if the purchase agreement didn't have that mortgage contingency, the buyer would not be able to get out.
Correct.
So that's why it is very important, because no one knows what a house is going to appraise.
Yep.
Like literally no one.
Yep.
So you have to have that contingency in there in case there's a big gap, the buyer can't meet it, they have to be able to walk and get their deposit back.
Now we're hoping that we've made it this far into the transaction that somebody is going to give or both parties will give. So I just had that happen before where...
Oh, it happens all the time.
It was $10,000 away.
Yeah.
I think it came in at... the purchase price was $193,000. It was a condo. Came in at $183,000. So the buyer came up $5,000 and the seller came down $5,000. Perfect, right?
Right.
Because they were both getting what they wanted and they both gave up the same amount, right? So
is it always that clean?
No. But if we can get it to that point and you have the right team, you have the right mortgage professional who can explain this, you have the right agents who know how to negotiate. Hiring an agent shouldn't just be for looks, shouldn't just be for their personality, shouldn't just be for their
Instagram videos.
Their Instagram videos or their Google reviews.
Yeah.
You also need to make sure, can they negotiate? Because they're going to have to negotiate on your behalf during the inspection period, right? What if there are things, and there's always things.
Yeah, we'll get into that.
No matter if it's a new construction or it's an older home, there's always something that is wrong with a house.
Always find things.
You'll always find things.
Absolutely. That's
how do you go and have somebody negotiate on your behalf? And then there's also the negotiation on even part of the stuff that you're going to put in the contract that says what stays or doesn't stay, right?
Right.
Or they're going to negotiate on the price because the value came in low. So you have to make sure that the agent that you work with is a good negotiator. And there's certain questions you can ask that I usually sometimes do tell my clients that if I don't know their agent or whatever it is, ask these questions because before you get into it, you want to make sure, can they negotiate?
Right. Because, I mean,
How do you
everyone
handle
hopes it's going to be a smooth transaction.
Correct.
Everyone hopes for that.
It's real
Everyone's
estate.
working towards that.
It's real estate.
But you don't know.
I say that every
Yeah.
time I talk to somebody, whether it's a client, a consumer, or it's a real estate agent, we know it is real estate.
Yeah.
There is nothing. And when it happens, we're all surprised that it happened. We're all sitting there going, holy crap, how did we do this?
Yeah.
And there wasn't any problem.
Yeah.
But it doesn't always happen. So, but this is, again, why we want you to read the offer, read the purchase agreement, know what you're signing, know what you're putting in there, because
100%.
again, there's so many things that can affect it.
Right. Right.
So go ahead. What else is next?
So the next step is the EMD, the earnest money deposit. So basically, in Michigan, the law is at the time of the offer, when you submit an offer, you have to also put an EMD, we call it an earnest money deposit.
Or good faith money, as people
Right.
like to say it.
Right. In a non-interest bearing escrow account, which is
usually held by
title
the
company, real estate company,
yes,
whatever.
correct.
So, and that's at the time of the offer. My philosophy on EMDs is EMDs are kind of silly, especially from the seller's side. When they look at a low EMD or a high EMD, does it really matter?
It only
Because you get it, the buyer gets the money back if it doesn't appraise and you can't reach an agreement.
But if a buyer,
there's
and
an
it has
inspection
happened,
issue,
that a buyer decides not to buy the house in the last minute,
yeah,
because there are buyers that get cold feet.
it's happened.
Okay, so
Right.
there are buyers that get cold feet. There are buyers that I've had one that all of a sudden another house popped up and they were willing to walk away from their $5,000 earnest money deposit to go put an offer on a different property.
Right.
Okay, so I do see it again. We use this term necessary evil.
Yeah.
PMI, that. It is a necessary evil.
See, I think it's an easy way for the buyer to stand out because I think EMD amounts are silly and mean nothing. And I tell my sellers this too because, if there's an issue with the inspection, they're going to get it back.
Yeah.
If there's an issue with appraisal, they're going to get it back.
Correct.
So really, what's the point of having a high or low number? This is where I would say, in terms of what makes a perfect offer. If you're the buyer, this is a really great opportunity. Put in a high number, and
Because you're going to get it back.
Yeah.
Unless you.
and if you know you're the type of personality that's going to walk away the day before
Correct.
closing, okay, maybe
Maybe
not.
Yes.
But if you know this is the house,
Go ahead.
and
Yeah. Put it.
barring any issues, put in a high MD.
I tell my clients that all the
It
time.
all goes towards
because
closing anyway.
they don't. The seller all of a sudden goes, "Wow,
Yeah.
okay, they really want this
Whoa,
house,
right? This
You know,
person put in 2,000. This person put in 15,000. Oh my God!
Yes,
but
they-
it means nothing.
It doesn't.
At the end of
Because
the day,
again, if
at
you
closing-
are going to go ahead and you're going to purchase this house,
Right.
aside from the fact that the house doesn't come in value or whatever happens, you get the money back. You're buying the house.
Right.
Although I do get the question, does my EMD go towards anything?
And the
does
answer
it-
is yes.
And it does. It
It
does.
goes towards the
But
down payment.
It's
Yes.
amazing how many times people say, so the EMD that the realtor's holding, where does that go to? It goes to me. I said, no. I'm like, it goes to me. It goes to my
Yeah, right.
pocket, right? No, it goes to your real. It goes towards the. So if you have to come into closing with $100,000 and you gave $5,000, now you have to come in with $95,000.
Exactly.
So that money is your money. You gave it as a good faith, as money up front, that we will give you credit for it.
Right.
So, but there are a lot of people that don't understand that, and they
Right.
just think it's sitting somewhere else, and they're like, well, they're just sitting over here, so it's non-interest bearing. So when does it come into play? And
Right.
So but I also say that agents should be explaining that to the clients.
Exactly.
When they make the offer and you're giving the CMD, you will get credited towards all the money that you have to bring to closing that your loan officer is going to talk to you about. You will get credited that amount of money.
Right. So I think having a higher-ish EMD is a really good opportunity to stand out over
Yep.
other buyers. That's pretty frictionless.
Correct.
It's not going to affect you either way. It's part of your down payment anyway.
Yeah.
And if it doesn't appraise or
You get it back.
you get back anyway, all of
Yep.
it. So I don't know, come in a little higher. It'll make your offer look stronger. And at the end of the day, it doesn't make a difference anyway.
Yep.
So why not go a little higher on the EMD? That's usually
Yep.
typically my advice.
That's mine too.
So that's I'd say that's one of my keys to the deal is come in a little on the higher side on the EMD.
Yep.
It'll look like a stronger offer on paper,
Yep.
but at the end of the day, it's the same down payment
Yeah.
anyway. So whether you're putting a $15,000 EMD or a $2,000 EMD, your down payment's going to be the same.
Correct. Unless you're a 0 down or a 3% down and your EMD can't be any bigger
Right.
because of those reasons. But again, that is when you have to have a good team that is telling you what to do and how they're going to help you get your offer accepted based upon your limited resources and the offer that you're submitting, because unfortunately sometimes it's just not enough.
Right. Okay, well, that's our part 1 of Inside the Perfect Offer.
Maybe 3, 4,
we've-
5,
we've-
7 parts.
We've run out of time.
Yeah.
This is something I really want to dive in further.
Yeah.
I think there's a lot of just misinformation and just not even misinformation, but just stuff that you don't know what you don't know.
Correct.
And I think there's a lot of information here that we can dive into. So thank you, Jeremy, for another great episode.
Thank you.
And thank you, everyone, for listening and tuning in.
Always great to be here.
And I can't wait to dive into part 2 of Inside the Perfect Offer.
Yeah.
And I'm Ben, and
I'm Jeremy, Ben and Jeremy's.
Ben and Jeremy's. We should get some merch made up.
I already know somebody that was
Yeah.
starting to make it some shirts for us.
All right. So next week we'll do part 2
Yeah.
of Inside the Perfect Offer.
Sounds good.
Awesome. Thank you.
I'll see you then.
All right.